Hello and welcome to another episode of Weekly Forex Forecast. We are starting from EURUSD, so let's have a look from the monthly time frame. So trending downwards, trending upwards. We've seen this pattern for the last couple of weeks, so nothing has changed. Let's move on to the weekly. Weekly time frame, we can see a nice, consolidation, area of resistance, area of support. Not much change. Let's go to the daily. Right now, the daily is interesting, right? It's bouncing off this area of support. This is the resistance of the weekly time frame. We can see this nice downwards trend as well, trending towards the downside. Moving averages are well above the candlesticks, which means it is definitely on a downtrend, and this could likely continue. Let's move on to the 4-hourly time frame. Now, the 4-hourly, as you can see, is trending towards the downside. Moving averages are currently as well above the candlesticks. Recent bearish engulfing candle confirms the trade could potentially go down. The last candlestick closed as a bearish engulfing candle as well. If we have a look at the 1-hourly time frame, it did make a new lower low over here, now trending towards the downside. Potentially you could enter this trade short for at least, well, if you would scalp for at least 10 pips, but if we have a look at the 4-hourly time frame, since this was the lower area, this is what you want to be aiming for. So at least for take profit 125 pips, and potentially if it does carry on shooting towards the downside, towards this area of support level, it could be a bigger trade towards the downside to around 90 pips profit. So what I would say or suggest is just put your stop loss well above the moving averages and 2-to-1 risk to reward ratio. Obviously, once you reach your first take profit one, move stop loss to maybe half or entry to manage your money, and then maybe close a portion of your first take profit level and then carry on trending towards the downside. That's what I would do at least, and that's what I recommend you guys doing as well. So GBPUSD, as you can see, trending towards the downside. Massive downtrend over here. We have this nice area of resistance. However, it's currently pushing towards the upside. We also have this area zone that has not been broken, which is the area of resistance of the monthly time frame. As you can see, it never was broken. It tried to, did fail as well, although it did not close as a bearish engulfing candle. Huge candlestick over here on the monthly does show that bears or sellers are in around this area zone. So let's have a look at the weekly. Weekly, not too much is happening. It's a nice area of support over here. A little trend towards the downside. However, the moving averages, as you can see, are well below, which means it could potentially bounce back up to retest this previous area level. But this is the weekly, so let's go to the daily. Now the daily is the opposite. The moving averages are well above the candlesticks, which means it's trending still towards the downside on the lower time frames. So this could also mean we are currently on a squeeze pattern. As you can see, a nice trend on the daily time frame. Maybe we're gonna squeeze the price, bounce off somewhere over here and then break. If it does break, it could be a nice trade towards the downside. If it breaks this area zone and the moving averages, could potentially be a nice trade towards the upside to retest this previous area top. Now we need to check on the 4-hourly time frame to see where could we enter. Now this would have been a great trade towards the downside. Bearish engulfing candle crossing the 25 and 50 moving averages on the daily, trending towards the downside. I would have taken probably this trade to retest this previous area level. However, we can see that this area level is pretty much being retested. So this could also mean that we might have an exhaustion to the previous area of sensitivity, which is here, before maybe the market crashes with the moving averages and bounces off in around this area. Bearish engulfing candle as confirmation over here. If we do get one and bouncing off the moving averages 25 and 50 on the 4-hourly time frame, could be a nice trade towards the downside just around this area. So just to retest around 60 pips profit, 2-to-1 risk to reward, so 30 stop loss, 60 take profit. That could be pretty good. Obviously you could potentially extend your trade to around this area zone, since on the daily time frame this area of support has been tested as well multiple times. this would increase your risk to reward ratio to 5:1. You could also increase the stop loss a little bit just to make, you know, a nice risk to reward ratio. Let the trade play around. That's what I like doing. I like to use a big stop loss level around 60 to 80 pips. That's my favorite, and that's what I suggest you guys doing if you like to swing trade the forex market. Now, gold US dollar currently trending towards the upside. Moving averages are telling me that 25 and 50 well below the candlesticks. A little flag pattern, you could say, going towards the downside. Little squeeze pattern on the weekly time frame, trending towards the downside and the upside simultaneously. However, the moving averages are telling on the weekly time frame at least that is trending down currently. On the daily time frame, same scenario. So we could see a trade moving towards the downside, since the weekly and the daily time frame is trending towards the downside. Although we have this little trend over here moving towards the upside, as you can see, bearish engulfing candle closed on the daily time frame, which is an important time frame, and closing in between the 25 and 50 moving averages does suggest that this trend is towards the downside, and we could see a push exhaustion push scenario. Now on the 4-hourly time frame, we can see the same thing, a nice bearish engulfing candle. However, it did not yet break the 25 and 50 moving averages. If it does break the 4-hourly 25 and 50 moving average, shooting towards the downside, we could expect a pullback. If we get a pullback with a bearish engulfing candle on the 4-hourly time frame, we are shooting towards the downside to retest this previous area of support. If this does get broken, we are pushing down, up and down once again to retest this previous area of trend line. Now, Kiwi US dollar, as you can see, trending towards the downside very nicely. However, the moving averages are telling me that it's trending towards the upside. So we have a downtrend, we have a little uptrend as well. However, we also have a bearish engulfing candlestick, and we are in some sort of consolidation zone. This area of support and resistance has been happening as well, so very important. Now, weekly time frame, what is it telling me? It's trending towards the downside on the weekly. You can see this nice, you know, squeeze pattern over here. However, the price has been undecisive. As you can see on the weekly time frame, look at these three candlesticks. They haven't been really breaking anything or doing anything. And on the weekly time frame, the price has broken the moving average, but we saw this push towards the upside. So very confusing thing is happening at the moment. Very hard to tell which direction it will go. On the daily time frame, however, we can see it is trending towards the downside. Recent bearish engulfing candle, however, it didn't really do anything. Bullish engulfing candle bouncing off the 25 and 50 moving averages. Price is definitely getting squeezed. So as I said, it's like a champagne bottle. It will either shoot up or down. If it breaks this area level of the weekly support, this could be a good trade towards the downside and a huge swing that could potentially be at least 500 pips profit, but this has not happened yet. Let's have a look at the 4-hourly time frame, trending towards the upside. Potential little trend over here that could potentially bounce back and retest this previous area level. That could also happen. And let's have a look at the 1-hourly, trending towards the downside. So my bias is at the moment, so honestly, looking at it, it does look a little bit bearish. However, anything could happen, and as you can see, bullish engulfing candle over here recent could be pulling back to retest this previous area level. Really hard to say for NZD USD. I would skip this trade next week. Alright, USD Japanese yen trending towards the downside. Nice support over here. As always, we are reverse engineering everything. So the weekly time frame, nice trend towards the upside. It has been trending towards the upside, as you can see over here. I changed direction a little bit to make the trend make a little bit more sense. As you can see, trending nicely. Moving averages are well below the candlesticks, showing bullish pressure. Same thing on the monthly time frame. So monthly and weekly are trending towards the upside. Now the daily time frame is a little bit different. It's trying to break this area zone. However, the support has been recently quite strong, and a bullish engulfing candle close, so it could potentially mean a bounce back. So let's have a look on the 4-hourly time frame. So the 4-hourly time frame does suggest bearish scenario. As you can see, trending towards the downside nicely. A nice bearish candle crossing the 25 and 50 moving averages. Let's have a look at the 1-hourly time frame. So what I would say, if it does cross the 25 and 50 moving averages and maybe this area level, it it could potentially be a nice trade over here in this little gap that we have. So how many pips would that be? I don't think a lot. 16 pips, around 20 pips profit potentially. Obviously, if you would be taking this trade as a swing trade 4-hourly time frame, I would be looking to enter the trade somewhere around this area if it breaks the moving averages, and stop loss just above the moving averages and this trend line. And what I would do is take the first profit somewhere around here and leave the rest of my trade running. If it does, it could be a nice trade towards the downside with a nice push exhaustion to the previous area sensitivity push scenario. So USDCAD resistance support over here, right? Trending towards the downside. Moving averages are well above the candlesticks, which means it's definitely a seller's market rather than a buyer's. And we can have a look on the weekly. Same thing. A nice downtrend was happening over here. It kind of broke out a little bit, as you can see, now trending towards the upside a little bit with this move over here. However, it's in between the 25 and 50 moving averages, which usually act as a resistance zone. We also have drawn a weekly downtrend as well, so it could potentially be a huge resistance zone around this area. And on the daily time frame, we can see, a little bit different scenarios trending towards the upside. 25 and 50 moving averages, bullish engulfing candlestick or recent one on the daily time frame, and the 4-hourly time frame bullish engulfing candlestick as well. However, we have this trend towards the downside on the weekly, right? We also know that this area zone is super important. Why? Well, it's on the 1.26000 level. It's a psychological level. These levels get respected as support and resistance. So definitely expecting some sort of move towards the downside before maybe a potential push towards the upside to maybe retest this previous area level or break through and then push exhaustion push scenario. So it could be a pullback. I would be wary with this trade. I would be really looking at what's it doing. If it does break the 25 and 50 moving averages and give us a bearish engulfing candle, could be a nice trade towards the downside. However, if it does break the psychological level of 1.26, we are waiting for a push exhaustion to the previous area sensitivity around here, and then again push towards the upside. And if we quickly have a look at Canadian US dollar, as you can see, hedge funds have been selling Canadian dollar 45,000 to 41,000 to 26,000 on July 13th, as you can see. So they are definitely selling off USDCAD, which could definitely mean that a pullback could occur. And if you want, you can join our premium trading services. We send one free trade every week and 3 to 10 trades per week to our premium members. Link down in the description below, and I'll see you guys next week. See you later. Goodbye.